Well, there are some fresh concerns today of a spreading bank crisis following the failure of Silicon Valley Bank. The stock market opened today with the Dow quickly falling, down nearly 500 points, following a tumble for Swiss lender Credit Suisse, whose shares fell 20% after its largest investor, Saudi National Bank, said it could not provide the bank with more financial assistance. Meanwhile, the Department of Justice and the SEC have launched dual investigations into Silicon Valley's bank sudden collapse. Now, remember, this hour yesterday was when that was breaking. We were finding out what exactly they were going to be going through. One area that may intrigue those federal prosecutors that we know about involves shares sold by top company execs before the bank imploded, like right before. We're also learning more about SVB's board that was reportedly very light on banking experience, but had some connections at Lehman Brothers, according to Maria Bartiromo, who told me that last hour. Reportedly, it was packed with staunch Democrats, though. Emily, apparently, check the box of what you can do for the job, less important than check the box of where those donor cash dollars can help some Democrat politicians. A fair question, I think.
And I want to go back to the shares, right? So we know that the CEO, Greg Becker, and the CFO, Daniel Beck, they each sold shares in their bank the week before it collapsed, right? And Becker, according to the Wall Street Journal, his shares were worth $2.3 million. And that's partly why the shareholders, as we've been discussing, have sued them. Because remember that there's protection and there's insurance, but the shareholders, to a degree, were not protected. So they are suing civil and also alleging criminal liability. They are alleging concealment of these two. So there's a hefty liability that might be on the hook for. But I want to point out why this is so important, in addition to being a page out of Paul Pelosi's playbook, that the day that these guys sold their shares was the day that new rules were put in place to prevent against this happening. That broadened that window to 90 days to allay suspicion of illegal trading. So essentially, they knew if they waited even one more minute, they would be subjected to a longer window that they would have to wait before getting that income. Crazy how that coincidence of time rings through. So I think the SEC has a lot on its hands, as does the DOJ. But just remember how the SEC has been occupying its time up until now, which instead of protecting the investor, has been requiring businesses to comply with their carbon footprint and their ESG requirements and the like. So they've been a little bit distracted. I hold them not blameless as well.
Yeah, distracted. I do want to get to the politics, James, because I think it's important to know who was working. And who was there not saving the life of that bank and the livelihoods of people who maybe didn't have. Not everybody had millions. A few people had up to what was FDIC insured, $250,000. But what about the politics in play here?
Well, it's disappointing watching politicians panic. If ever there was a group of people that you really should have allowed to bear appropriate losses, it's this group. It's venture capitalists and the startups they fund. It's the money, yes, as you said, above $250,000. They should have taken the loss. And I think it's a shame that federal officials blinked in this case. But if they want to investigate it, government officials need to investigate themselves, because government policy is all over this failure. You look at what challenged the bank. It was the inflation created in Washington and then the interest rate increases that resulted. All of those assets on their books that forced them to take this loss, bank regulators have been encouraging them to hold for years. Treasury bonds, government-backed, mortgage-backed securities. The regulators tell them this is safe, this is the kind of stuff you should own. So this is really a Washington-created failure. And absolutely, let's look at if there is also individual wrongdoing at the bank. But this is kind of textbook on why market discipline is so much better than regulatory discipline.
It's an interesting point. I do want to get, and I'm going to ask the team if we've got that from Signature, on some of the things that they were spending money on. So I don't know the makeup of the employees at Signature, but we know the makeup of the people who are running Silicon Valley. And when you have a bunch of people who don't know what they're doing, certain things get done because it's what they want. Yeah. Are they Democrat donors? Are they catering to them? It's because it's what they want. Can we roll a little bit of how they were spending their money at Signature, which also failed this week?
Yeah, Signature. Our bank is beneficial as a signature. We'll start off small, but soon we'll sprawl. We'll build a bank that's built to last. lost into enthrall.
Yeah.
So, Kara, when you read the reports, they spent a lot of money on this, and their bank failed this week too, for different reasons than Silicon Valley Bank. But the trend that we see, as James pointed out, is that the government now is considering, well, even if you had above $250,000, we'll bail you out. I mean, that's a gift that, like a student loan handout, might have to go to the U.S. Supreme Court.
That's exactly right. I do think there's an analogy there, too. When the government guarantees these loans will be paid off, tuition goes up for universities, too.
100%.
So this is kind of a similar problem. But I think the big issue here is this creates a moral hazard. If the government keeps bailing these banks out, they have no incentive to invest prudently because you're sort of kicking the can down the road. And frankly, a lot of the smaller folk will pay the price. And again, it's that moral hazard. If the government keeps doing this, we saw traces of this in 2008. It's sort of the same story, but a little worse this time. So we cannot let that moral hazard be written again.
So, Kaylee, who was the flex for with spending a lot of money on a video with their own, kind of wants and needs, I guess, satisfied in that? I don't even know what the point was.
I don't know the point. Get back to banking. I want to learn more about Signature. I want to learn more about Silicon Valley Bank as well, particularly these donations. We know that Chuck Schumer's PAC received money that was somehow connected with the bank or one of its board members. He's returned the money. Maxine Waters returned the money. I've seen allegations of Hillary Clinton from the New York Post. Still looking into those. But I want to get to the bottom of this. One board member said after Donald Trump won the election in 2016, she went to a Shinto shrine to pray. And she said this: "I prayed for me," according to CNBC, "and for us to get beyond our grieving and shock and to figure out how to engage and listen to what happened and come back together." Maybe she should have been praying for her bank and the practices that were going to get people out of a lot of money instead of praying after the election of Trump. I have questions. Could this be an FTX-like situation where we know Sam Bankman-Fried gave millions and millions? He was a huge Democrat donor. That remains to be seen. Certainly have those questions. I want to get to the bottom.
So, real quickly, Maria Bartiromo last hour said that there's one other thing we need to dig deep into, and that is the Chinese bank deposits that were going on at that bank, that there were a number of companies who may have had above, again, $250,000. Well, I don't know that we are obligated to make Chinese companies whole, no matter how much money. But if we have to pay through FDIC, the government says, I guess they'll do that. But above that, should we be bailing out Chinese companies?
Absolutely not. There are so many unanswered questions, and we're just now skimming the surface with some of this reporting.
Hey everyone, I'm Emily Campagno. Catch me and my co-hosts Harris Faulkner and Kaylee McEnany on Outnumbered every weekday at 12 p.m. Eastern, or set your DVR. Also, don't forget to subscribe to the Fox News YouTube page for daily highlights.